Welcome back. You're tuned into Bazaar Morning Call here on CNBC TV18. Hope you're having a good morning. Well, if you're a bull, you'll be happy to see the screen. The SGX Nifty is indicating a big gap up of around 130 points odd. But let's talk about a couple of stocks. We gave you the top 10 stocks that we're looking at. Well, Siddhartha Khemka, head retail research at Motilal Oswal, joins us on the show. Hi, Sid. Morning. Thanks so much for joining in. Well, we have quite a few stocks to discuss. So let's start off with Titan and Kalyan Jewellers. They've come up with their operational update. Now, for Titan in particular, what's your view on the stock? Some of these stocks are traded at elevated valuations, and then the room for error is a little bit limited, at least in the near term. Your take on this space?
Yeah, very good morning, Nigel. Glad to be on your show. So if you look at what has been happening across the market is, yes, with some of these, the consistent compounders, the so-called consistent compounders, the valuations had peaked to almost like price to perfection. If you have, especially in the case of recent example of Bajaj Finance, where the growth was marginally lower than expectation, we saw the kind of beating the stock had. Coming to the jewelry stocks, Titan and Kalyan Jewellers both have reported, I think my reading says that strong business updates. Titan has reported almost 11% growth in the jewelry segment, and that on a high base of 30% growth in the same quarter last year. Similarly is the case with Kalyan Jewellers. The jewelry business continues to report strong growth, and that is kind of heartening to see. We have seen some of the updates from the recent consumer names, at least from some of the FMCG names, which got impacted in terms of volume growth because of the rural slowdown. But I think that is where Titan continues to do well. The business growth specifically has been pretty strong across segments. Jewelry segment grew 11%, watches, wearables grew almost 14%. The other businesses are also showing traction. So overall, I think Titan continues to show strong growth quarter after quarter. The jewelry business is benefiting from the rapid pace at which the organized industry is growing. And if you look at Titan, this has a market share of just 6%. And the kind of expansion they are doing, they have opened more than 100 stores in the quarter. I think the growth trajectory for Titan could be consistently strong going forward. So very positive view on Titan. We have a buy rating on Titan, and I think with a target price of almost 2,900, giving a good upside from current levels.
Okay, so 2,900 rupee target price is what you have. That's a big upside from current levels, and you have a buy there. What about TCS? The earnings come out later today. Everyone knows that numbers are going to be, growth is going to be on the slower side this time around. But at any point in time, would you look to buy the stock?
Yeah, Sonia, good morning. So if you look at the overall IT space, I think this is the seasonally the low quarter for the IT space. But what we believe that overall for our IT coverage, we are expecting a median revenue growth of almost around 2% on a Q-on-Q basis. That is on a constant currency basis. The growth in EBIT and PAT is expected to be a bit better, about 6 and 7%. What is heartening to see is that the pressure, the weakening macros, as well as the recessionary fears that we had at the start of the quarter has been having a lesser of impact on the overall demand environment. That is based on what we hear from the management. So I think it's a weak quarter, and in that, if you look at margins, would see some improvement. There has been improvement in realization. Forex has been favorable. And the major challenge that is on the supply side, that is where things are improving. Salary expectations of employees have cooled off. Attrition has kind of started moderating, and easing supply situation going forward will be a key positive for the entire IT space. If you look at specifically TCS, I think the expectation is a revenue growth in constant currency of 1.6%. We are expecting 60 basis points of margin improvement, led by stabilizing supply constraints, rupee depreciation, and, as I said, receding attrition. The deal pipeline remains strong. We need to see whether management for this quarter has been able to continue with the strong deal pipeline. But yes, in the near term, this is a weak quarter. Things need to improve There has been mixed views, especially with terms of the growth demand in Europe, and particularly some of the segments like consumer telecom, where there is some weakness in terms of demand. But I think the long-term outlook for something like IT remains strong. The current order book for most IT companies are kind of record highs. There has not been any particular change in terms of either you see the core structural growth story for the long-term Indian IT space. The corporate governance continues to remain strong. Balance sheets are pretty healthy. The cash flows are strong. The payouts are pretty good. So I think these are good times for really investors who are looking at 2-year plus horizon in IT. We are favoring large caps where the businesses are more diversified and are less susceptible to the cycles. So we prefer something like Infosys, TCS within the IT space.